longer time trade.
I'm just wondering what you make of HCLTech, Kunal?
So overall trend on the IT sector is being positive, and HCLTech is not an exception. But at the same time, earlier we had discussed about this along with Infosys. It's near to the peak, so one should be buying on the corrections by any chance. If HCLTech comes near to 1925 or 1900 kind of levels, one can certainly think of buying. The stop loss in that case can be 1870, and then we'll see how it shapes up. But otherwise, the trend is absolutely positive. Buy on dip can be good strategy on this.
Buy on dip is the technical strategy for HCL, right? Good morning, Sunny. Great to have you on the show, of course. Just let's start with your take on HCLTech.
Good morning, everyone. I think pretty much in line set of numbers from HCLTech, although we have seen marginal revision of guidance at a lower band by 100 basis point, but again, the outlook for the quarter 4 is slightly muted. The deal will continue to remain healthy. At the same time, we have seen a short-term discretionary spend that has come back. So I think overall outlook is positive, but looking at the recent run-up in a stock price, I think again the fair value of HCLTech is close to 2,100 rupees. So would like to remain neutral on HCLTech in a short to medium term. Yes, over a longer period of time, definitely on a lower base of FY25, I think FY26 look far better for all the large cap tier 1 IT companies. So I think from a longer term perspective, somebody is looking for kind of 10 to 12% kind of appreciation stories, then large cap IT company is placed to win. I think mid-size IT company has still potential to outperform its large cap peers in terms of financial growth numbers. So Firstsource, Bitlasoft, Coforge, Persistent, I think all these companies are growing in the band of 12 to 15%, driven by organic as well as inorganic growth strategy. So I think mid-size IT company is the place to win. Looking at a positive commentary from large cap IT company, I think I'm expecting a similar commentary from mid-size tier 2, tier 3 IT company. And that should further lead to the re-rating in a mid-size IT players.
Okay. Sunny, hi, morning. Just curious whether the sharp downtick in the rupee or the depreciation of the rupee has factored in any of your research in the recent past. And previously, it used to be a list that was drawn up every time the rupee dropped a little bit. You would say which are the beneficiary companies, but it's not as simple as that one would think. So how are you looking at that, and which companies benefit, which companies lose out?
Yeah, definitely, Alex. I think rupee depreciation do help export-driven businesses, predominantly IT and pharma. But at the same time, we have to keep in mind that most of these businesses do follow an hedging strategy, and 30 to 50% of their currency exposure is hedged directly as well as indirectly. So yes, benefit will be there to some extent, but at the same time, nowadays what we are hearing from the management is that even client is aware about the extra benefit which all these companies derive, and to that extent, pricing is something which get readjusted to wherein the client also takes some partial benefit of this rupee depreciation which is passed on to the client. So I think net, yes, impact will be there, but I believe again this is a very transitory. The rupee depreciation is something which we have seen time and again. Every 3-4 years we see a sudden downtick in the rupee, and then again it goes back to a normal level. So I think yes, benefit will be there for a quarter or two, but post that ultimately in the long term everything averages down. So clear-cut beneficiary IT and pharma, and at the same time companies which are high on foreign currency debt, obviously they will have a little bit of an extra payout which will be seen in upcoming next 1 or 2 quarters. So those companies will definitely lose out in a short term.